with over $7 trillion traded daily. We have buyers and sellers within the markets, where it's being operated 24 hours per 5. That means it is not a 24 hours 7. 24 by 7 is 24 by 5. So that means every 24 hours for 5 working days, 5 solid days, that is where trade take place. Okay, it allows participants, including banks, including businesses, including speculators, to exchange currency pairs to profit from the fluctuations in the exchange rates. Okay, so the momentum that goes in within the market is what we are looking for. The bottom line is to make profit. Okay, but just as you are making profit, somebody might be losing, and just as you are losing, somebody might be making profit. Okay, so there are some currency pairs that usually traders do trade. Example is that of the Euro USD. We have the Great Britain pounds against the USD. We have the ZAO USD and stuff like that. Some currency pairs are common. Others, there are others are not common that way. Get it?
There is one thing that you need to know about time to trade this major currency pairs. The best time to trade major currency pairs is during the London New York overlap. That is between 1 p.m. to 4 p.m. UTC. That is London time. Or between 8 a.m. to 12 p.m. Eastern time. Okay, that is where 70% of volume occurs. Major pairs, as I earlier said, give examples, which is euro against US dollar, the Great Britain pounds against the United States dollar, the US dollar against JPY. These are most active currency pairs that you could trade within that time frame. There are other key trading season overlaps. But then the major currency pairs is what I've highlighted on. This is based during the London New York overlap time. Currency pair like the USD JPY is active during the Tokyo Open and the Tokyo London overlap. The USD vs the CAD, that is Canadian dollar, is active during the London New York overlap, specifically when Canadian data is released. So, of course, the market is 24 hours from Sunday 5 p.m. Eastern time to Friday 5 p.m. Eastern time. Some days are omitted. Saturday trade doesn't open on Saturdays and all that. So you need to take note of your trading time and adjust yourself to the particular currency pair that you want to trade it. Minor currency pairs crosses are best traded during market overlaps, particularly the London New York session that I already gave for high liquidity, and regional surgeons for specific pairs like the Euro GPY. These are currency pairs that offer high volatility than majors. The minor currency pair has a higher volatility than the major currency pairs, but making them ideal for trend trading. When euro yen or pound news breaks, the momentum is as high impact is going to have a high impact than other currency pairs. Of course, most of them are dependent, whilst others aren't so much dependent on the global and economic fluctuations of the markets. Again, there is another thing that you have to take a look at. If you are trading, you need to take care of the um the lot size. Okay, the lot size and the pips that you are aiming at. Okay, there are some people that trade with emotions. If you are trading with emotions, and in a day that you have experienced much loss, in an attempt of recovering, you expect to go on a bigger lot size. Why? Because you need to recover most of your losses, and people end up blowing their account because they um never took into consideration risk management. Okay, so if you are trading, you need to take care of your lot size. How many pips are you going to get from the trade? Lot size is basically a factor, okay, that determines how your transaction amount is measured as against the currency pairs that you are trading. There are standard lot size, which has a smaller options, including the mini, micro, and the nano lots. Lot size determines the pip value. Okay, it also determines the impact risk. It actually also influences your profits and your loss. So if you have a bigger lot size and the market is not going in favor of you, then of course you are going to have more losses than profits. In that same opposite meaning, if you are trading at a smaller lot size and the market is not going in favor of you, then of course you are going to have less risk impacts. So the lot size is very important. You don't have to joke or compromise your lot size. You have to take your lot size into serious consideration and apply such risk management to avoid excessive loss and to manage your trading risk level. Some people calculate their lot size by deciding the amount of money or percentage of the capital willing to be risked. Others to forget to set them, so they either are already set for them using the default, or mistakenly they had chosen a wrong lot size for the trade. The pips is a very important aspect of Forex. If you are dealing with pips, you are actually able to compare the percentages in points, price interest points, which is the smallest unit of price movements in Forex trading, typically the fourth decimal place for most pairs, example the Euro USD, and the second decimal pair for the yen currency pairs, representing risk and profits. So ideally, the 10 pip is coming from pipettes, which is 1/10 of a pip. So a pip is basically price in percentage or price interest point, and is the smallest value of change within a currency pair. So the higher your pips, then of course the higher your profits. And on the contrary, the lower your pips, then the lower your profits. So pips are well noted. Usually the last decimal place of a price goods, and most pairs goes out of this for the smart places, but of course there are some exceptions like the Japanese yen and all that. So pips play more role into forex trading, and lot size also helps you to manage your risk level, helps you in risk management. There are other things that we probably can look into whilst trading. But then, of course, the major things is what I have shared with you. And there are more into Forex. Don't trade with emotions. If you are trading, you need to understand the market. You need to follow direction, and you need to also apply the very important strategies. You know that not to fall short of the market. Don't risk your capital by trading with the money necessary for living expenses. So don't use your food money to trade. Your um um don't trade with, of course we would take loans to trade. That is not an advice that I would give. But of course, if you want to use a loan amount to trade, nobody permits you to do that. Don't revenge trade. Avoid trying to immediately win back money after a loss, as this often leads to more losses. Don't revenge a trade. Don't ignore risk management. Don't trade without a plan. People also do poor decision analysis. They do poor analysis and expect the analysis to go in favor of their direction. That becomes a trading without a plan or an overtrade. You don't do an overtrade. Don't trade too many currency pairs. Okay, as a beginner, you should focus on mastering one or two currency pairs. And as you progress, then of course you can be involving other currency pairs, which could go massive with in terms of pips, and also help you to advance your forex trading in a good and proper manner. You don't joke with risking too much. There's no need to risk too much. Go in with what you can afford to lose, but not to lose. Okay, it is just a way of portion yourself to stand the purchase of forex market. There are more into trading. Don't treat like gambling. Success requires discipline and patience. If you are trading, you should have some measures that guides you in trading. There are big forex traders and there are small forex traders. So the market is full of beginners, intermediaries, and pro traders. You can as well have an expert who could guide you, of course, charge huge sums of money as they take you through. Others to also sacrifice their time just to let you understand what forex trading is, and that is basically what I'm doing right now. So appreciate the little that you get. Knowledge is key when you want to progress in the forex market. Forex is not for the weak, but then with proper skills and proper direction, forex is very, very and something that you can hold on to. You need the best of your time to do proper analysis and the best of your time to trade in the right direction.
Okay, so we personally will be looking at how the chart goes, right? So as you can see on my screen, um, we have a chart, Forex charts ready to analyze. So as you can see, I did some small markings just to look into the analysis of this particular currency pair. Okay, when you look into Forex trading, there are some key terms you need to understand. You need to understand when we say market is bullish. You need to understand when we say market is bearish. You need to understand what we mean by lower highs and higher lows, lower lows and lower highs. Okay. You also need to understand some other strategies that would also help you. That is when you need to locate your support and resistance level. They are all very important when you basically want to look into forex trading. Okay, so as you can see, I have a chart quickly on my screen. You need to also understand trend. Okay, when we say trend, what I told we mean by trends, we have some uptrends, we have some downtrends. You need to basically understand what trends means. If not, you would find it a little difficult because you can't be trading in the opposite direction when the market itself is moving in a different direction. So let's say, for instance, on my screen, this is a typical downward trend. So you are expected to sell, right? You need to know what to do in the downtrend. Okay, just as you are to sell at that same point, others could buy, but that could be a short buy, right? So there could be a short buy in a downtrend, but more importantly, there's going to be a long sell. So we look at a long sell in a downtrend and we look at a short buy in a downtrend. That same way, if the market, for instance, as you can see on my screen, there is this particular trend which was an upward trend, right? This is an upward trend. So if you are in an upward trend and you need to buy or sell, you have to really look into why you need to buy, at what long term can you buy, and at what long term can you sell. In an uptrend, there is a long buy, right? And then in a short, in an uptrend, there is a short sell. You can't be selling for too long, whilst it's in an upward trend. Because, for instance, if you are selling, doing a long sell in an upward trend, that means you expect the market to go down, whereas the market is moving upwards, and that is going to really cost you a lot. You're really going to lose a lot of dollars, so much dollars to the extent that you become frustrated, and you would eventually blow your account if you're not careful, right? So you need to understand trends. You need to understand when to buy, how long you need to buy, when to sell, how long to sell, right? So let's basically look to this particular trend that we have on our screen. We have this beautiful charts. I was just making small analysis and I decided to share to you so that you add it to the strategies that you have, all right? If you are making any analysis, this is ZAL USD, right? Gold spot against the United States dollar. These are 4-hour charts, and I'm basically looking at it very well from a strategic point of view. I'm looking at it, it's a downward trend. We are not yet to break out. You know, there's some terms that you need to also associate yourself with. That is breakouts. You need to know when to pull, and all that, right? So as we move further, you begin to understand some of these things in that regards. Okay. I believe by the end of this video, you will be able to understand how to read price, identify trends, mark key levels, and enter trade with confidence. It is not about quick money. This is about building a real skill, right? Okay, so let's see. Sometimes too, we could also be hit by economic news. So there could be fluctuations, there could be inflations, there could be interest rates, there could be some level of global uncertainty. This is why gold can move very fast and very strongly, because when price goes up, it means gold is becoming stronger. And when it goes down, it means the US dollar is stronger, right? Gold is heavily influenced by the factors that I've already mentioned. Now, let's see how the market really behaves, right? How it really works, okay? The market is a battle between buyers and sellers, just as I said, okay? It is a combination of buyers and sellers. People are in there to buy, others are in there to sell. When a buyer dominates, price is supposed to rise because that is where the influence is coming from. And in the other opposite direction, when a seller dominates, that means price is going to fall. So the sellers have a influence, or something like an influence over the buyer's dominance, all right? Okay, here is the key. Market moves in patterns, just as I was explaining. Okay, some patterns, and we have a whole lot of patterns, chart patterns. Okay, but that will be in our next video when you really hits me in the subscription button. You hit the subscription button and then you notify me in the comment section to bring out that video. If not, then we would go ahead and be bringing you the fantastic news, fantastic info tutorials like this, so that you really get to understand what you are doing in the Forex trading. Okay, now then again, there is candlesticks. Okay, we have candlesticks, a lot of candlesticks. That is what a trader would always look at. Okay, so a trader trades according to these candlesticks. Okay, you can't do away with the candlesticks. They are part and parcel of the process. Right? There is a candlestick shows you when markets open. Okay, when a market is open, when a market is closed, when a market is so high and it's so low. The ultimatum is to look for the volatility. Okay, an entry point where you can make something out of something out of the game. All right, a strong bullish candle means buyers are in control. So for instance, when you see this very chart that I have there, okay, you can see the green candlesticks. All right, those are bullish candlesticks, right? When a market is moving in favor of the buyers, that is where you see the candlestick in green, right? That means the buyers are dominating. Okay, they are the bulls of the game. On the other side, you see this is a very steep red candlestick, right, which was moving downwards to the extent that they superseded the buyers. When a candlestick is red, then obviously it tells you it is a bearish candlestick, right? So we have a bearish candlestick, which is a red indication telling you that the sellers have taken over, and the bulls or the green candlestick is nowhere near. The buyers are no more in control. All right. There are wicks. Okay, some people never associate themselves with this particular term. There is a wick. When we say a wick, it is basically a rejection. When it goes in, when the buyers are trying to pull the markets in favor in the other direction, and the sellers too are also pulling the market in the other direction. There is something like a struggle, right, that goes in there in the market. So you get to experience wicks. Wicks are located just under a candlestick. So every candlestick, irrespective of how long or how short it is, you can see a small tiny line indicating the wick. So it's something like, we call it wick. We have a long upper wick and a long lower wick. All right. So when it happens down the candlestick, it is a long lower. If that means there were rejection from the bottom, right? And then, like for instance, this very particular one. Okay, as you can see, this very particular one was a lower. Sorry, it was a long lower quick. All right, that means there were much rejection from the bottom. On the other side, let's consider this very particular. So I was just talking about this one. Okay, as you can see, this is a long lower quick. That means there were much rejection from the bottom. Okay, when sellers were trying to push the market down, the bulls were also trying to push it upwards, right? On the other side, this particular candlestick, the green one that we have sitting in line with this red one, that looks very close in terms of length and width. That is also a wick. It's a candlestick with a wick, right? But this time around, it is not as a long lower wick. It is a short lower wick, meaning that there was slight rejection. That rejection was a massive, okay, from the bottom. But when you come across a long upper wick, so let's see a long upper wick, you can see this one. This one is a long upper wick. That means there were much rejection from the top, okay, much rejection from the top. And that tells you that the struggle continued between the buyers and the sellers. And the sellers were not able to take dominance. They were still beaten by the bulls, and they got their wick in that particular shape. So I think by now you have associated yourself with the terminologies and some components that comes together to form candlesticks. And in as much as they come to form candlesticks, they go in a long way to tell you a trend, and they go in a long way to tell you how the market is moving. Okay, then again, so let's go. We have some lower highs and higher lows. I can, yes, let them just quickly squeeze this particular chart. All right, let me squeeze this particular chart so we look at the lower lows and the lower highs. Okay, let me just hit one or two areas of that. Okay, so beautifully, this is a very nice chart. This portion, this is a downtrend. All right, that tells you the markets is moving in a downward direction. Okay, so we have more sellers pushing the buyers down. They're pushing price down, and the buyers are trying to push the price up. Right now, then again, there's something that I forgot to talk about that happens to be the support levels and the resistance levels. Okay, so at some point there is a breakout. Okay, but before you trade
confidently, you need to identify these points. Okay, for instance, that we are in a downtrend markets of this nature, we are expecting to have a lower highs and a lower lows. All right. On the other side of the line, like for instance, when I'm trading in this uptrend, I'm supposed to have a higher highs and a higher lows. So there is a higher highs and a higher lows in the upward trend, and there is a lower lows and a lower highs in a downward trend. So this portion becomes a lower low. This portion becomes a lower low. And we are expecting another lower low to hit around this particular area. All right. On the top level of the charts, or the upper section of the chart, we have the lower highs, all right, where market was able to hit at high volume, but still in a downward trend. But because of that reason, we call it a lower high. So this point is a lower high. So first lower high, second lower high, and we are expecting a third lower high. The moment we hit a third lower high, then of course there could be a breakout, or the market then tends still to follow the downward trend by coming to it to hit LOLU, right? Now we've gotten ourselves associated with the trends and the points that we need to take care of. Okay, these are clear distinctions. As a pro trader, you need to identify these key spots because it is these key spots that enables you to basically trade with confidence. Okay, you can't just be jumping into the market at any point in time, hungry for success, and you are trading without any direction. Okay, so direction is key, and strategy is also key. All right. Okay, so this is a very nice chat. We are expecting the market to hit at a lower high, after which it comes down to hit a lower low. All right. Now, the possibility that there's going to be a breakout is high. But until the market moves further down to where the arrow is currently drawn, we cannot see or justify um, our point to see that the market is moving still in a downward trend. The market could change and move in an upward trend. It could be influenced by economic fluctuations, could be influenced by news, could be influenced by inflation, and it could be influenced by so many other factors, interest rate, global uncertainty, and other sort of uncertainties. All right. But irrespective of that, if we are to maintain this chart, then we expect the market to move in a downward trend for quite some time. Okay. Now, the entry point. At what point do you enter a trade? Okay. For instance, if you're in a downward trend and you want to take an entry, you want to make an entry, it is advisably to take an entry point from a lower high. Why? Because that is when we are about descending. Okay? If you take it from a lower high, possibility of getting more pips within your trade is high. But when you take an entry at a lower high and when you take an entry at a lower low, then you are expecting a breakout. All right? That is, you are expecting a breakout. If you are expecting under a breakout, then you can go ahead and enter through a lower low. But of course, there are other medium. Some people would enter in the middle of the charts. They will do the analysis and enter somewhere in a lower low within the jump. That could factor into your further analysis on a lower time frame. But if you are looking at this 4-hour time frame, then advisably, you are not supposed to enter through a lower low, because the next lower low or our third lower low is expected to hit this point. So when you enter through this lower low point, then it means you are expecting a breakout. When there is a breakout, fine, of you obviously still be in the market, and the trend continues in a downward position, and that could earn you more pips. But if you really want to make more pips in a downward trend on this 4-hour time frame, it is advisable that we enter at the third lower high here, expecting the market to move in that direction, the downward direction, and that would take us all the way down. Even if there is a breakout at the lower low, that shouldn't be of our concern. Why? Because we are still in the market, we're way back in the market, and we expect that massive pips to dig down the drain, to get the ball rolling, to keep it more in going. Then we can have the trade going in our favor. At some point, price could be rejected, and there could also be a break even. Okay, if price reject, trade reverses. So you can be in a trade, you are trading downward, you are in a downward trade, and price rejects at a point that buyers are not accepting the prices of the sellers. When it happens that we trade is expected to reverse, but if not, there is going to be a small breakout. I would say small. Why? Because there is going to be a trade continuation. It's going to continue the trend to which it started, right? So before you do any further entry, sometimes people open 2, 3, 4, 5 entries. Before you do that, wait for the confirmation, get your support levels and your resistance level. As you can see, I have my support level, and at the top here, this level is the support level, right? And we have the resistance level down there. This is the resistance level, right? So when I get my resistance level and my support level, at a point that there is a breakout to my resistance level, that resistance level becomes a new support level. So further on, there's going to be new resistance level because my first resistance level has been broken out. But as the trade continues, other resistance levels would be created, and that becomes part of the analysis if you are looking into this particular strategy. Okay, now currently, as you can see, the market is trading up a little, upward, slightly upward, at a price of 4,665. But this time around, it is trading in on as a lower high, moving a little to the lower, a lower low, sorry, trading at a lower low to a lower high, right? So we are expecting the market to be at a lower high. Then we can obviously pick an entry. But if you want to scout, I know some traders love scouting. If you want to scout, you can be as you can just be trading intermittently. You can do a short buy and a short sell, right? Before the full sell takes place or before the full buy takes place. Okay. This was just a small analysis, but as you can see, the blue arrow indicates the market to hit a support level at the top there, this very area, after which it should fall completely to follow the downward trend. Now, we are expecting a breakout. Okay, so let me draw another line here. We are expecting a breakout back to this point. Ah, yeah, expecting the breakouts. So first breakouts could happen here. All right, there could be a first breakouts here. Okay, where I have put the green line, that could be our first breakout points. And we expect the market to reverse. So we expect the markets to reverse to our previously resistant level, which is this point. Then afterwards, a massive fall. Okay. So we expect a massive fall. Down here. We expect a massive fall down here. Okay. So this is how you basically do your analysis. But of course, these are predictions, and Forex is basically being able to predict the markets. If we're able to predict the market right, then of course, the markets will in your favor. But don't forget that this prediction is not automatic. Why? Because it could be subjected to uncertainty. All right? Let me just use a normal line. Then the blue line was not bad. Okay, so this is how it looks like. Then I just indicate, so this should be my lower high. This should be my new lower high. Or my third lower high. Then this point should be my third lower low. Why am I calling it Ted Loalu? Because we had a second Loalu here. Sorry, lower high. Second lower high here. And a first lower high as well. Oh. This portion too, that appears to be my third lower low. There was a previous second lower low. So I'm just doing that indication for simplicity, so that when it's time for trading, you will not find the charts in a confusion state. I hope you get me right. So here becomes my first lower low, right? This portion. So we expect a breakout here. So let me indicate the breakout as well. This portion is going to be a breakout. Then we expect a new resistance level to be here. So our resistance level, a new resistance level to be formed here. This should be our new resistance level. When our new resistance level falls here, then of course we are going to have a new support level. So new support level is going to form here. So then put this side by side, or just beneath the line. Oh, hey, have you just beneath the line so that we can have a clean chart. All right? If possible, maybe I could extend this portion of the line so that I have a clean chart. So this is what I'm talking about. We're going to have a new support level at this point because that is where a breakout is going to happen. But afterwards, there's going to be a downward trend. So this new resistance level, until the new resistance level is broken again, that still remains our our resistance level. So when we are entering at that point, we need to factor the trend. We need to look at the momentum that is happening within the markets. Below support, okay, this for buy. But above resistance, this for sell. That is where to put stop loss. So sometimes people are afraid, where do I put my stop loss and where do I take my profit? All right? And I'm just giving you the key strategy that at the point that you've done these analysis, you've entered into the trade and you expect to make profit. You need to set your take profit. And you need to also set your stop loss. Okay? So for instance, the trade is currently at 4,667. Okay? And we need to make an entry. That obviously have to do. That is not the verb. This particular area is not the best method unless you are doing scouting or you are trading on lower time frames. It is not the best time to trade. If you are using this particular for trading chart, the best time to trade is to enter here, the third lower high. Okay. So that is a support. All right. That is a support. So you can pick trade here. So we can pick trade here, right? But since we want to pick a sell, we need to set our stop loss above this line. Okay? This line. So let me quickly draw that line. So let's see, this is our third line. I love the green so that the charts doesn't become too cumbersome. I still want to keep it very beautiful. So let's change to green. That, okay. So if you are picking the creed here, you can't set a stop loss below this line. No, you need to set a stop loss outward. You need to set a stop loss here. Yeah. Oh, good. Look at me. Hold on. Hey. This is where you need to set your stop loss. Then take profits. You need to take profits so from before your next key level, right? Your next key level. So you can take profits you can take profits anywhere around here. It is not advisable to take profits during the breakouts period. Of course, people do take profits around that period, but it is not advisable to take profits within that period because there the momentum of the markets breaking out and bouncing back and continuing the trend or changing the trend is undecided. There is no direct or let's say there is no confirmed direction. Okay, market is now decided. So advisably, nobody would expect you to take profit within the breakout period. You should rather might have taken your profits before the breakout takes place. Or better still, for some of you who still want to be in the trade and confidently wait for further four, you take profits after the breakouts. So if for instance just as we have speculated that this downward trend moves to a new resistance level, okay, and you want to take profit, you can make here take profit one, and if you have a second entry, you can do take profit two. So you allow the second trade to be running so that you can possibly take your second profit here to TP2. That becomes your second take profits level, right? You're going to take your TP2 here whilst you take your TP1 there. Okay? I think I'm trying to make this chart looks amazing. Very amazing. But then just as we earlier narrated, okay, market could turn in the opposite direction. It's not all the time that is going to go in your favor. This is just an analysis. It's just a prediction. It could happen and it could choose not to happen. Okay. So before I come back to tell you more about the um markets going on an opposite direction, okay, let me take the few minutes to tell you about risk management. Okay, trade has to do with risk management. If you are trading without proper risk management, you stand the chance to put your accounts or your capital at risk. Okay, this is the most important part of trading. Never risk more than 1 to 2% per trade. Good moves fast, so protect your account. A good trader is not someone who always wins. Okay, of course, we agree that it's not all the time that you'll be winning. At some point, you're going to lose, and at some point, you're going to break even. But who knows? If goes in favor of you and you are winning, don't forget to exhibit proper risk management. Don't forget to take into consideration proper risk management. A good trader is not someone who always wins. It is someone who manages losses very well. So of course, trade is not, it's not a daily that trade is going to go your way. It's not all the time that trade is going to go your way. You need to have some level of risk management. You need to apportion set your stop loss or set you put yourself together to the extent that if you are running at a loss, are you able to contain? Are you trading with a low lot size? Okay, if you are great, you'll be trading at a bigger lot size, and that could put your account at risk. Then again, the trading psychology, okay, that is also another aspect of trading. Because it involves a lot of thinking, a lot of analysis, and a lot of predictions. You need to consider emotions. You don't have to trade with emotions. You can't just be emotional about your trading. You can't be trading out of fear, or trading because of fear, or trading because of greed. You can't be trading with greed. You can't be trading whilst you are impatient. Okay, you need to work on your emotions. You have to be patient where you have to be patient, and you have to be what do you call it? Bold where you have to be bold. Okay, of course you can't be bold at points that you have to see it. And the vice versa, you can't be afraid when you have to be bold. So you need to balance your emotions, because it goes not just the money, it goes psychologically, emotionally, and mentally. You may stay disciplined. That is the key factor. You need to stay disciplined to follow your plan. You don't have to chase trades. If the first trade doesn't go well, don't be quick to go into another trade. Take a rest, reanalyze on your plan, your chart, and then you can if there is a loss, you accept your loss, and you go in again with a proper trade dimensions. Okay, trading ZAO and USD, gold and US dollar is a skill that takes time to master. If you focus on trend levels, confirmations, risk management, you already be ahead of most traders. All right. Remember, the market rewards patience, not speed. So keep learning the charts, trust the process, and let the market come to you. Okay? Don't rush through trades. Don't over trade. Of course, automated systems could be used, but check to see if they are really the best systems. If they are not the best systems, you don't put your money at risk. You don't put your capital at risk, okay? You ensure that you are dealing with a proper, if you also don't have a proper learning strategy when it comes to some of these things. Just sit back, learn, watch most of the YouTube videos to abreast yourself with these 3D strategy. Get one unique 3D strategy that you are going to always use. You don't be jumping from strategy to strategy. Carefully analyze the markets and make sure you are also in a well positioned to trade. Okay. Um, of course, there are account management. People do account management, but I would advise that it's good if you have someone managing your account for you. Because you are a newbie or a novice, that is not a problem. It's not a big deal. But if you want to go pro, you should be able to trade yourself. You should be able to learn the strategies that involves in trading. You should be able to face the realities of trading. Okay, that brings us to the end of this video. If you like it, hit the subscription button and drop your comment in the comment section. I'll be around to be assisting you further if you need one or two things. Basically surrounded what we've already talked about. Expect more videos on this channel. Let us learn together. Okay, as you learn, you begin to get the knowledge, and based on the knowledge, you'll be able to take decisions. All right, perfect decisions, and you'll be able to hit the jackpot if that is your main lookout. Time for you to go. If there is also a strategy that you have been using and you feel it is one of the best strategies to at least to succeed, you can also drop it in the comment section for others to also learn. Trading is all about learning. There is no way you can trade without learning. Of course, you could be guided, but it's better you acquire the knowledge, the skills, and the necessary expertise to be able to do it at ease. Yeah. I believe today's lesson on what we discussed concerning the terminologies used in Forex trading and the strategies used in Forex trading is really going to help you a lot. I believe you've been able to understand where to take profits and to set your stop loss or your stop losses. Indeed, if you're able to do them right, if you do them right, you're definitely going to succeed. I believe you've understood what trend lines, what a downward trend means. You've also understood your an upward trend, what an upward trend line means. I believe you now understand what it means to see a lower high and a lower low, and a higher high and a higher low. We know where the markets break out and a new trend, either a continuation trend is formed or a new trend is formed. It is one point also noted that you are not supposed to treat at breakout period, because it is at that point that the market is very one, it is highly volatile, and two, it is very confusing as to which direction the market is going. Okay, this example I used is that of the downward trend. If you also get the chance to analyze an upward trend like this structure, you could actually set your higher lows and your lower lows. So let's see, for instance, we want to analyze this particular Give me set is now like a trend. This is an upward trend. Head up. Okay. This is an upward trend. So still it's under pressure from Lisa. Play 520. Because yes, we want to down to our buy rate. With Lisa, set down and support. Now your Mafti makes a run. Didn't want to. Let me insert. But people should choose with the red out. The I must live for fair red or for this so strikes. That club. Maybe not as often as do like this wrap up there. They use being able to that keep the ball or do something that gives them a throwaway. Okay, maybe I would have to do that in in a different video so that it doesn't become too cumbersome for references. For back to yes, though, for those of you who have been able to watch this particular video to the end of its kudos and more grease to your elbow. Try as much as possible to also look into the chat patterns. I love to have elaborated more on chat patterns. You know, chat patterns could be a supportive strategy. You cannot trade chat patterns alone. You need some kind of reference, and though you just chat patterns are there for reference sake to be able to see into the future. But of course, some chat patterns do work. If you are able to analyze properly, you can have all of them working. If not, some would work and some wouldn't. So all depends on how you study your chat patterns, how you apply them, and how the market plays out when you are using chat patterns. Of course, chat patterns is another video on its own. If you are interested, you can drop it in the comment section. If you want me to make a video on chat patterns, if you want me to make video on other trends, for instance, like with it for the downward trend, if you want us to analyze an upward trend, you can drop that in the comment section for us to also look into that. I wish you the very best in your Forex journey and in your future analysis. Okay, in your future analysis, I also wish you the very best in trading. Trading is not easy. Sometimes you run at loss, sometimes you run at profits. Yeah, but then you need to make more profits than just making more losses, right? That's having said, for sure, I would end here and see you in my next video. Thank you and peace out. 这人保谁有？哎，我直播开始对吧？